Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Somani Ceramics and the tiles industry. Let's understand whether this sector will pick up, and let's understand what you need to do in the stock. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Somani Ceramics, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions on Patreon. Once you have a $10 Patreon membership, you can ask me queries on stocks and markets, one query each day. This is not a site where you can ask me portfolio requests. For detailed analysis of stocks, etc., you can email me and we can have a different contact for that. But through this, you will be able to look at my portfolio, a watch list that I am preparing, and many other updates that I put up before YouTube on Patreon with respect to stocks and whatever stocks that I buy. Now about Somani Ceramics, it was established in 1968 and it is one of the leading tile manufacturer here in India. Their products include wall fitting tiles, floor tiles, bathroom, kitchen, and room tiles. So room tiles. It is one of the largest brands. So it is a brand similar to Kajaria. Kajaria is a larger brand compared to Somani, but not that huge. There's a stiff competition between both of them. They are also into bath fittings. The market cap of the company is around 500 crores. It has nationwide presence, and the market cap has reduced over the years since 2018, and I'll just explain that later on in this presentation. If you look at the financials of the company, then the sales went up by around 3% in Q3 of FY20, whereas the PAT went up by around 25%. So eventually the numbers started to show up now. The interest cost is high. The main issue with the company and the stock is the return ratios. The return on equity is a mere 9% in single digit, and net profit margin is around 9%. There are other companies that are available currently at very high margins, which are into different industries, be it in chemicals, be it in pure consumption, be it in even in some in autos, etc. So why would somebody get into a Somani? So this is really detrimental for the stock, and probably one of the major reasons as to why people are not looking at it. There is high promoter holding, a decent promoter holding of over 50%. There is an FII DII holding in there, but not that only less than 10% is with the retail investor. It's not like that. It's over 20-25% retail participation in the stock. So not to say that it is an illiquid stock or not many shares are traded. It's not like that. So what we have, as a situation, is that because of the numbers and the kind of situation that Somani is in, the industry situation, investors are staying away from the stock. If you look at the performance of the stocks, the stock is down around 95% from January 2018 high. So when it hit around 80 rupees or less than 80 rupees just recently in March, the stock was down something like 94-95% from the highs of around 970-980, which it touched in January of 2018. This was the bull run in the small and mid cap, in which probably everybody got sucked in, and this is the kind of wounds that people are having at the moment, 2 years, 2.5 years down the line. And this is the biggest reason why I believe that when you pick up stocks, you need to pick stocks which are debt free, which are cash rich, and which can survive the turmoil. So the turmoil began from 2018, and the slowdown began at that point of time. We are 2.5 years into that slowdown, and probably it's culminating right now in the next 6 months. It has recovered 50% from those lows of 75, 76. It has gone to 120 odd. So a reasonable recovery from those levels, but when you consider from all-time highs, it has not recovered that much. A relentless fall has happened in the last 2 years. The stock has not even seen 1 month of recovery in those 2 years. Sales have continuously deteriorated, profits has gone down, and also one needs to understand that the interest cost has increased. So steadily what has happened is that the numbers of the company have deteriorated. Business have been impacted by one blow after the other. So whether it was the GST in 2017, 18, and before that demonetization, and then the acts on real estate infrastructure act that came in, and because of all demonetization, GST, and this act, we had little, I mean, you can say in the real estate industry, not much of the transactions went through by cash, and that has impacted the business altogether. And when you don't have a growing real estate market or the housing market, then how would people buy tiles? And you can say the tiles business will go up. So one needs to understand that the economy needs to roll at 7% plus for these kind of stocks, for this industry to really do well. Sales have continuously deteriorated, as I said. So it has been the biggest casualty of the economic slump that we are facing currently. So what has been ailing the stock? Mediocre results is one. And why is the results mediocre? Because the raw material cost has increased. Why has that happened? It is because of the construction activity declining. So everything has a cause and effect relationship here. And once construction activity picks up, there are more houses built. There are people buying into houses, which it looks very bleak for the next couple of years. Once that keeps on happening, then the business will pick up, because people will renovate house, people will invest into renovating housing products will do well. And this is why I do not consider tiles or chimneys, or you can say bath fittings, etc., as a pure consumption play. I think this is a real estate ancillary play, just like auto ancillary, and it will only do well when real estate do well. Lockdown has also hurt the company badly. Construction activity had declined even earlier than that. So as I explained, in 2018 and 19, the economy was under tremendous stress, and we had the figures at 4.2%. This was before the lockdown, so it would go even further down. So as I said, the economic activity has to be 7%, round about 7%, for this industry to do well. Had very lofty valuations in 17-18, that has also corrected, and mid cap sell off has also means contributed to where the stock is currently. If you look at the technicals of the company, then it made a sharp bottom at 80. That has to be said. So 75-80 has become a sharp bottom. I do not see that unless something really bad happens with the company, because the company is coming out with very good numbers. So unless something really bad happens with the number, they get into heavy losses. I do not see 70 odd getting broken. It has recovered 50% from the low, so it has gone up a lot. You need to consider that from that March lows, the 200 DMA is still far off at 180. So the stock is something like 50% below the 200 DMA, and that's why I believe that it is extremely weak on charts. Short term support is around 104, 105, but you need to buy once it gets above 180. Only a sustained up move will come in when it goes above 180. So in my opinion, my call is avoid for the moment. If you have, then probably, if you have it, then have a 4 5 year view. Probably you will get 300 350 on the stock. I don't know, if the economy picks up, everything goes well, this can go up, but the next 2 3 quarters will be tough. Wait for sharp up moves to exit, probably would be my strategy if I had the stock. So this was my video on Somani Ceramics and the tiles industry. Kindly subscribe to my channel and hit the bell icon so that you get my videos straight away when I post it. Thanks a lot for watching.